The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it appeared on Thursday we maybe took a little bit of a breather in some of this sell-off in the grain and oilseed complex. It's really been a tough couple of sessions in a row here ahead of next week's USDA reports. Mixed action in the livestock sector as well. Another somewhat quiet day in the outside markets. Let's talk about things and get some perspective today from Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to have you back with us here this week on the show. And I got to say, nice to have a quieter day in the grains and oilseeds, which really, it just feels like fund managers and more have beat up this grain complex quite a bit here the last several days, Brian.
I think you're right, and I think that'll be evident tomorrow on the Commitment of Traders report that is released, which shows who the players are again through Tuesday. So I'm looking at the corn market, beans, wheat, all of them in trouble this week. But I just happen to be looking at the corn chart now. This is our fifth consecutive lower close. All of the closes have occurred near the low of the day, which is not a good sign. And I think to your analysis, points to either long liquidation or additional short selling. Funds probably adding to the short position and doing so on a good forecast. It's a good forecast for the Midwest. There's no weather threat in the forecast, and the markets have a tendency to kind of what I'm going to call capitulate. Once you get to mid-June, the forecasts are everything after that. And the forecasts since really mid-May have been great for expected production. Now, I know there's people out there who are saying, you don't understand our area. I do. There's 5-6% of the crop that's rated poor. That's not good. There's other areas that have a long way to go, and the whole crop has a long way to go. But it's a good forecast, and the funds are sellers.
To that point, it's an unfortunate thing, obviously, when producers in certain areas have a bad crop. But we've seen this how many times throughout history. I would say we even saw it last year. We had all that flooding in Northwest Iowa and parts of South Dakota and more, yet the markets didn't really react to that news. And when you have a few areas where the crops don't look very good, by and large, though, when everything else does look good, that's kind of the dominating factor in the markets, right, Brian?
It is. It is because there's in any year there's some crop that just isn't going to be likely good for some reason. That's just the law of Brian's law of statistics, I guess. It's just the way it goes when you're trying to grow a seed in the ground and weather and things. But the bigger picture perspective is that there is just enough inventory that the market can kind of get away with it, that end users don't have to chase. They see a crop coming. The increase in the Southern Hemisphere production has been ramped up over the last decade, and in particular the last 5 years, with record crops registered in Brazil again. And that's kind of your wet rag. So even these weather developments or pockets that we have in the U.S., to your point, last year was that swath of really wet weather that went through from southeast South Dakota, northwest Iowa, all the way through Wisconsin, and it did affect the crop, but not enough to take away from a record yield. And so there was a really good recovery period after that as well. And the argument we might have made last summer, if you remember, was as we got into July and August, there was no searing heat. There was no adversity after that. So the crops had a chance to rebound and do pretty well in those areas to very well. It's just not enough going on in the marketplace from a uncertainty perspective. And it's across the board. Wheat's down, corn down, beans down, good weather, good crops in South America, managed money selling, technicals look weak. I don't want to oversimplify it, but that's a quick summary on it.
And I know from a technical standpoint, I've been tracking this last several days. I know December corn, for instance, I've talked about that quite a bit. We've broken some key support. Does that open us up to another leg down? I know soybeans, we're getting back to testing some support. Wheat, same thing. We're testing some support levels here. And one has to wonder if, with all of this bearishness in the trade, if we are setting ourselves up, if there is a weather story, say in July or August, to find a decent bounce here, just because everything, it's kind of the old saying, everything's leaning to one side of the boat. When does it bounce back, Brian?
Yeah, it's a good point. And there is a certain percentage of the crop that is behind because of the cooler, wet weather and just didn't get off to an early growth start. And so weather in July and August is still critical. Some, myself included, probably believe that eventually the law of averages kind of kicks in. When you're too wet, you get too dry at some point, or it evens out, or too warm, too cool. But there's nothing on the very near term horizon. So we've seen these longer range forecasts really from starting in April really indicate kind of a dry June into July. That hasn't materialized. Maybe it's pushed back a few weeks. Weather is still important. I wouldn't, as an end user, make broad assumptions that it's going to be there. I think you need to stay on your toes. I think you recognize that there's really good value. The market is quickly taking weather out and may continue to do so. Um, if you might remember back in January, I always in January look ahead and say, well, what does it look like? And we said, well, we think there will be more acres. And if you have a big crop, you'll see sub $4 December corn futures. We're not that far away from it. It's just there a lot sooner than I would have thought. I would have thought maybe we held the 440, 450 area for another month until we felt pretty confident that the crop's on its way.
So thinking about for the producer from a risk management standpoint, I mentioned that we got very key USDA reports coming up on Monday. Grain stocks, planted acreage estimate update for June. They're always known to be volatile. What should a producer be thinking about right now for their risk management strategy heading into a report that we don't know what to expect? It seems the average is we might get a slight uptick in corn acres, for instance, but who knows what we could see. So what should producers look at from a risk management standpoint?
Excellent question, and I've got 2 points on this. First of all, for the reports, I've looked at it from every angle. I just can't come up with where I have a hunch or a feel that there's going to be a surprise. And so that's the definition. Surprise is what you don't expect. So if there's a surprise, I don't know where I'd expect it. I could make some arguments, and I can go back to 23 corn maybe and say, hey, I still don't think that crop was that big, and maybe stocks aren't that big. But the way the market has fallen in on itself, that might not have a lot of validity as far as risk management. So I would break this down into 2 areas, old crop, new crop. All right. So if you've got old crop to clean up yet, just remember it's June 26th, not May 26th, and not April 26th or March 26th. So I would be inclined to not give it away, but recognize at some point we got to start waving the white flag if there's a crop coming. So continue to maybe sell into that. Recognize you're only one phone call away from owning that if you really want to own it. Talk to your advisor. As far as the new crop, I wouldn't get too far over our skis again yet on this. We don't know what this crop is going to yield like, but I would use the option market because I'm not a big fan of forward contracting in June at prices below the cost of production. That just doesn't make a lot of sense to me. And I'm going to make the bold statement, which I think is true, that most farmers are below the cost of production on new crop right now. So I don't see selling into that. But I do see if you want to defend it, I would do it either with options or futures and then be pretty quick to the knife to cut that position if it doesn't look like the market is going to continue to go down. Very specifically, you could hedge the futures and you can hedge the carry into the market out to the March contract and anticipate that if corn does have another 25, 35, 40 cents down, a hedge will really fill that void well. If I'm using the option market, I actually like to going out to March right now and doing something called a fence where you purchase a put and then you sell a call out of the money. That's what I like in corn. And soybeans, I still like buying $10 puts in November, selling $11 calls or some call to that magnitude. But make sure if you do anything that entails risk, whether it's futures or short calls, or any position for that matter, make sure you have a thorough understanding. Make sure you ask advisors. Make sure you know what the risk associated with those things are. Things can change in a hurry, and you don't want to get surprised with something you didn't know because of a question you didn't ask.
Brian Doherty with Total Farm Marketing is our guest analyst here today on Market Talk. And I think something else, Brian, that maybe hammers home just how bearish really all these markets are. Commodities, livestock, I think, is even feeling that way. The outside markets to some degree is the US dollar index. Typically, when we see the dollar pulling back like it is, that's usually supportive commodities, isn't it?
Well, typically in the wheat market, it's supportive
Yeah.
because there's such an international flavor and connection between the dollar and wheat exportable countries elsewhere. So when the dollar is softer, in all else being equal, U.S. wheat just got a little cheaper. All U.S. products get a little cheaper. This week, the dollar's down actually quite a bit, and it seems like wheat can't go down fast enough. It's like a race to the bottom between the two if you look at the chart side by side. So really disappointing there. I think is a kind of a big picture perspective. Again, you're looking at just no credible threat anywhere in the world right now from that perspective, and I think it just goes right back to uh, where the traders are confident in crops, they're selling, and they're selling in part because they're already sold. So they've got I call it house money to work with. That would be credit in the account because if you sold at a higher level and the market's dropped, your account is going to show a credit for that level at the end of each day, actually, and over a period of time. So it's again maybe human nature to keep selling. I think there's also that element of maybe algorithmic traders or AI learning where they say, hey, the weather looks good, let's sell that. That's generally a good bet. And the weather does look good right now. So that's the one side of this. The other side, and again, I'll reiterate this, things are becoming a really good value to the world at a time where the crop's not in the bin yet. So if I'm talking to anybody out there who buys or an end user, I wouldn't quite, tell you that the window's shut on this crop yet.
Let's go over to the livestock trade and let's talk cattle futures. I'd call it mixed to slightly higher on Thursday. Cash trade, it's still pretty quiet. We have some bids out there 222 live, 365 dressed showing up on Thursday. That's a little bit off the current asking prices. What are you tracking in the cattle complex right now, Brian? Are things getting a little bit tired finally?
Well, it appears they might be. Now, if you just looked at cutout values, you could argue that they've just been on this trajectory almost straight upward. It looks like packer margins have improved significantly over the last week to 2 weeks, maybe up to $200 a head versus $100. Um, and then we're looking at, well, what are the cutouts really doing? Well, they've been strong. Now they've had a lot of volatility, but you're at, if you step back a little bit, you're at the very, very top of the pinnacle. As we've expressed, what goes up comes down. Things don't stay up forever. I think the market's getting a little tepid from the perspective of, are traders willing to, take that risk buying expensive futures to see if they can make more money on expensive, or do they just go to the sidelines? I think they're waiting it out. What I mean by that is, you've got Memorial Day past us, Father's Day past us. You've got the 4th of July buying probably pretty much done, from the retail. What's really needed? Maybe there'll be some last minute shopping there, but you're just looking kind of beyond that grilling season, and you're looking historically at a time where I would say it's easier for prices to drift down than to go higher. And often I look for a market to find a low sometime in the late summer, early fall. So it does look tired. It does look like the trade has had some rally attempts and sort of fallen on its flat on its face, and that's where we go with it.
How about over in the dairy market? Looked like maybe some gains in barrel cheese and butter on Thursday. I mean, what are you tracking across the dairy complex, Brian?
We're tracking all of those items and more. Okay, so
Okay.
the let's start with the dairy production most recent report, 1.7% versus a year ago increase. So we don't have a shortfall of supply compared to something, right? Compared to a year ago. Looking at a weak cheese market right now, a weak dollar should help that. And we've seen demand develop at these levels before. But again, we saw the big run up in price. Then we saw this nice right shoulder of a head and shoulders formation. become fulfilled. The market dropped down, and sorry, got interrupted. And so what I'm looking at here is a market that's trying to search for a bottom. I'm getting pretty confident that we're close. I don't want to call a bottom, though. Oversold conditions. Stochastics are real close to giving buy signals on crossovers. Had a nice little upturn today after prices worked lower this morning. A contract or two is exhibiting some new contract lows with small reversals. So I'm looking at a lot of things, but I'm actually looking at this stochastic momentum indicators, and they're all running into the buy window. And so I think the market is going to consolidate. The problem with the dairy is the same thing that the wheat has, the same thing that the corn market has, the bean market has, is the egg sector is getting really beat up right now. And the fund money, I think, went to equities. They moved out of commodities as long as it looked good. They're selling baskets of commodities. And I think the dairy market was the recipient of that as well.
Brian, great thoughts as we close it out today. Anything final you would mention or reiterate for folks?
Don't give up on the markets yet. Look for opportunities. If you haven't done things like buy a put, sell a call, things like that, learn those tools. One of the things that we're getting caught for the second year in a row for a lot of producers is the simple idea that prices just were never really attractive. And I agree. When you look at the cost of what it takes to grow crops, and all of the uncertainties with fertilizer, machinery, and labor and equipment, it's a stressful environment, yet the price isn't there to reward you to where and you're not being greedy. Give me a 10%, 15% return for the risk I take growing crops. That hasn't been there. Yet at the same time, there's been some very good defensive posturing through the use of tools. So again, use the tools, learn the tools. Do not have a conversation with somebody who says, "Well, that's speculating." Speculating is also doing nothing with your crop. Learn how to use the tools and learn how to incorporate them, and get yourself a good lender who understands the tools and that can help you, finance hedges and things like fences.
Brian, if folks want to reach out for a conversation with you there at Total Farm Marketing, what's the best way?
The best way is to give me a phone call, 800-334-9779. Second best way, shoot me an email, brian@totalfarmmarketing.com, and Brian has a Y in it. Or check out our website, totalfarmmarketing.com. A lot of great resources there.
Brian Doherty, Total Farm Marketing. Always good to hear from you, sir. Have a great weekend. We'll talk to you next week.
Okay, thank you much. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.